In this video, we're going to be talking about continuation pattern, although I did in my previous video, but now we're going to be diving real deep into every single details on continuation pattern. So without wasting much of your time, let's get started. So when it comes to continuation pattern, first of all, we have to know what trend we're in, if we're in an uptrend or a downtrend. And we only do this from the bigger time frame. So this is the bigger time frame. The bigger time frame is in a downtrend. So all we should be thinking is sell. So at this point, this is where we go over to the smaller time frame to find a good place to sell from. Now the market is consolidating to the upside, so this is where we go over to the smaller time frame to mark out our trend line below this low, and then marking out our support level. So at this point, what do we do? At this point, where we see this in the smaller time frame, we wait for the market to break our trend line, break our support level, and then retest the support level. So at this point is where we enter our short position, stop loss above the high, and take profit to the downside. So this is where we wait for the market to move straight to our take profits, because the market is in a downtrend from the bigger time frame. This is the bigger time frame. So the bigger time frame shows that the market is about to go down and started making consolidation to the upside, which we mark out our trend line, giving us two touches. This is the first touch of the trend line, and this is the second touch of the trend line. So we marked out our support level and then waited for the market to break the trend line, break our support level, and retest the support level. So this point is where we enter the short position, and then we waited for the market to go straight to our take profit. So same thing if the market is going up. As you can see right now, this trend is going up. The market is in an uptrend from the bigger time frame, and then the market started going down. Now this is where we go over to the smaller time frame to mark out our trend line, giving us the first touch and the second touch of the trend line, at least two touches. This is the first touch and this is the second touch of the trend line. So anywhere you want to draw your trend line, as long as it's giving you a first touch and a second touch. So this is where we mark out our resistance level, because the market is about to go up. We mark out our resistance level, which is here, and then we are waiting for the market to break our trend line, break our resistance level, then retest the resistance level. So this point is where we go ahead and enter a long position, stop loss below, and then take profit to the next swing high. And then this is where we wait for the market to go straight to our take profit from here. So this is exactly how I take my trade. So if you still don't understand this, you have nothing to worry, because right now we're moving over to the main chart where I'll be explaining everything and you'll see for yourself. So this is GBP USD. You can see this right here. Take a look at this GBP USD, and we are in the 4-hour time frame. This is the 4-hour time frame, and this 4-hour time frame is a big time frame. So this is the higher time frame. So what is the higher time frame saying? You can see this. The higher time frame is going up. So now we know that the market is going up. This means we are looking out for buy opportunities. So let's go over to the 15 minutes time frame. Let's see what the 15 minutes time frame has to say. So now this is the 15 minutes time frame. You can see this right here, 15 minutes. This is the 15 minutes time frame, and the market is going down. So now this is where we wait. It's all about patience. So from this point, you can see that the market is really going down, and the market is giving us a retracement which we expected. So this is where we mark out our trend line, giving us at least two touches. This is our first touch here and our second touch here. We should also mark out our resistance level, which is this level right here. So this is a resistance level, this is a resistance level, and this is also a resistance level. So the market didn't break this resistance level. Instead, the market went lower. So we are making here our new resistance level. So now let's watch and see what happens. What we are expecting this point is the market to break and retest our resistance level. Look at this. The market is going down, and then we marked out our trend line and our resistance level, and then the market broke our trend line, not just the trend line but the resistance level too, and now the market is retesting the resistance level. So this is confirmation enough that the market is about to go up. And if you take a good look at this, this is like a market shift in the smaller time frame. The market broke this high right here. So at this point, we can enter our long position from this point. So we're putting our stop loss below the low, although it's 22 pips. I always use a 20 pips. And then we are sending our take profit to the next swing high. Where is the next swing high? This right here is the next, is our swing high. So our take profit to the swing high. So this is what we are expecting. We are expecting market to go straight to our take profit from this point. Okay, at this point, the market smashed our take profit without wasting time. Take a look at this. The market went straight to our take profit. So at this point, I'm very sure that you understand what is really going on. Just like I gave you in the examples, you can see everything from this view. This is the consolidation to the downside I was telling you about. And then we mark out our trend line, giving us two touches. This is our first touch, our second touch. And we mark out the resistant level. And we are expecting the market to break and retest the resistant level. If you take a good look at this point, this candlestick closed above this high with a body candle. You can see this. This is a full body candlestick. I also watch out for this confirmation too. So if you take a good look at these candles here, we have body candle, we have wick candle. The wick candle is just like this line, the straight line. So the body candlestick is the, you understand, this literally the body. So I always watch out for a candlestick that will close above the high, the resistance level I marked out. So if it closed with a weak candle, this is weak. Let me give you an example. This is the body candlestick and this is the wick candle. So I always watch out for this body candlestick to close above the highs. So before taking the trade, I always make sure the market shift occurred with a body candlestick. This is the body candlestick, not this tiny wick, not the wick. I always make sure it closes with a body candlestick. So as you can see, we mark out our trend line and we mark out our resistance level, and we are waiting for the market to close above the resistance level with a body candlestick. And you can see this right here. The market did. The market closed with a body candlestick, and then we waited for a retest of the resistance level, which the market also retested the resistance level, and this is where we entered this market, and then the market went straight to take profit without wasting time. So for some time I've been trading with GBP USD. I always trade GBP USD, but this doesn't mean that the continuation pattern only works for GBP USD. You can use the continuation patterns for other currency pairs like Euro USD, AUD USD, CAD USD, XAU USD, and the rest. So right now let's go to another currency pair, and now we are using gold. Let's use gold for example. So now this is XAU USD, and as you can see, this is the 4-hour time frame, and we're clearly in a downtrend. So this is more like a sharp downtrend. We can move over to the 1-hour time frame so we can see the structure of this downtrend. So you can see this right here. This is clearly a downtrend. So at this point, let's go over to the smaller time frame, which is the 15 minutes time frame. Now this is the 15 minutes time frame. Let's see how the market goes from this point. So you can see from the bigger time frame, we are in a downtrend, but right now this is the smaller time frame. The market is going up. Take a good look at this. The market is literally going up. So this is where we have to wait and see what the market are going to do from this point. So right now we can see from this point, the market is clearly going up, which will enable us mark out our trend line. And as you can see, the market has broke the trend line. So now this will mark out our support level because the market is going down, and the market broke our trend line and our support level. So at this point, this is where we say, okay, this market is about to go down. And if you take a good look at this point again, the market closed with a body candlestick. You see this red candlestick to the downside. It closed below this low with a body candlestick. Remember, this is the first touch of the trend line, and this is the second touch of the trend line. So the market broke the trend line and then broke the support level and closed with a body candlestick. This is very important. If the market did not close with a body candlestick, then do not enter the trade. I always make sure the break of the low is closed with a body candlestick. Do you understand? I always make sure my market shift is caused by a body candlestick. Do you understand? This is a market shift right here. The market is about to change direction. The market closed below this low. Do you understand? So at this point, this is where we wait for the market to retest our support level before we can enter a short position on this trade. So let's wait for the market to retest our support level. Short position around here. We can take our stop loss to the recent high, but taking a good look at this, this is a 50 pip stop loss. Take a look at this. This is 5 here. This is 5,000. This means this is a 50 pip stop loss, which is very, very wild. And this is gold, XAU USD. You don't trade with a 50 pip stop loss. It's really, really wild for a stop loss. So I always use a maximum of 20 pip stop loss. Like I've always told you before, this 2000, this is a 20 pip stop loss. And my take profit, I always put it down to 5 risk ratio. But as you can see from here, this point seems like a swing low. So I'll extend this, my take profit, to this swing low right here. So now everything is set. All we're waiting for is for the market to come to our position. All we're waiting for is for the market to tap us into this trade. Okay, right now the market has officially tapped us in. Right now we are in the market. So we're in a huge profits. The market is seriously going down. The market has retested our resistance level, and now the market went straight to our take profits. Now take a look at what happened here. Exactly what we predicted. The market retested the support level and then went straight to our take profit. So if you take a good look at this very well, the market is giving us another opportunity from here. Just hold on. Let's see if the market will give us another opportunity. So we can mark out this level here. Let's see if the market will really. The market came back to same level we talked about. You can see this is our first touch of the trend line. This is the second touch. The market broke with a body candlestick. You can see this right here with a body candlestick. So right now the market has come back, retesting our support level. You can see this level we marked out here. The market is retesting this level right here. So from this point, we can also enter a short position because this is like another sell opportunity. Short position, 20 pips stop loss. I always use 20 pips stop loss. And our take profits, I always use a 5 risk ratio. But this is more than 5 risk ratio. This is like 7 risk ratio. You can see this right here. See this risk reward ratio 7. So this like I'm risking $100 to make $700. So this trade, let's say this trade I'm risking, this is a 7 risk ratio again. So this trade I'm risking $100 to make $700. So same thing for this trade again. I'm risking $100 to make $700. So let's see what happens from this point. If this level will push the market to the downside, let's see. So right now the market is really going down, And if you notice from this point, take a look at this, guys. Take a look at this. The market is really giving us another opportunity. The market is really giving us another sell opportunity. Same thing we've been doing. Take a look at this. First touch of the trend line and second touch of the trend line. And then let's mark out our support level. You can see this. Don't get confused. We are just doing what we've always done. This is the first touch of the trend line. This is the second touch of the trend line. The market broke the support level with a body candlestick. You can see this body candlestick. You can see this right here. So we marked out this point. The market has not retested this level. So let's wait and watch out if the market really does. Okay, let's expand this. We're entering another short position from this level here. So short position, 20 pips stop loss, and then I'll take profit to the downside. And let's use a 5 risk ratio. That's also this point. Okay, let's see if we can double this to a 10 risk ratio this time. This is quite a big risk because we're not sure if the market will go that low, but let's see what the market does from this point. Okay, we're still in profit on this trade, and right now the market has tapped us into this new trade. You can see this. We hit TP on this first trade, and then we're still in profit on the second trade. Okay, we hit TP on the second trade. Now we are left with this trade, and then there we go, TP hit. So if you notice these three trades, we just had 3 winning trades in a row. If you notice from these 3 trades, we all did same thing on this trade. You can see this. We waited for the consolidation to the upside before we marked out our trend line. You can see this. This is our trend line. Our trend line. This is the consolidation, then the trend line. This is the consolidation, then the trend line. And for the third trade, this is the consolidation to the upside, then the trend line. And then we mark out our support level, and we waited for the market to close the support level with a body candlestick. You can see this. The market closed this market with a body candlestick. Close below with a body candlestick and retest. So same thing with this one. Market closed with a body candlestick. You can see this right here. Market closed with a body candlestick and retest again. And same thing with this one. Market closed with a body candlestick also. You can see this body candlestick is very, very important. So the market closed with the body candlestick. We waited for a retracement at this very point right here, the last touch of the trend line. That's the second touch of the trend line, which the market later did around here. So this is where we entered the trade, and then the market went straight to our take profit. So these confirmations are very important. Waiting and waiting and waiting for every confirmation to line up before you can take your trade. So this is why we had all of this trade all to ourselves. We made a $700 on this trade, extra $700 on this trade, and then this trade was a 10 risk ratio. So we made $1,000 on this trade. And this trade is really a nice one. I shared this trade on my Telegram channel. You can see this right here. I also took the trade. I made $1,000 from this trade. I raised a $12 account to $1,000 on my Xness, and this is literally one of the biggest trade I've ever taken. I mean, I keep selling at these points that very day, and the market just keep going down to my favor. So this is how the continuation pattern works. But also, this doesn't mean the continuation pattern works 100%. No, because at the point where you feel like the continuation pattern is 100% sure strategy, this is where you might want to slow down and reconsider. Just because we had the 3 winning trades in a row doesn't mean the continuation pattern really works. You should go ahead and backtest the continuation pattern. If it really works for you, you should go ahead and backtest them. Take a look at this right here. Let's adjust this trend line. See this? The market gave us exactly what we needed. First touch of the trend line here, second touch of the trend line, and then the market broke the support level with a body candlestick. You can see this. This is a body candlestick. And if we had entered this market from here with our 20 pips stop loss, you can see the market goes down just a little bit, and then the market may have taken us out. If we had entered a short position around here, do you see this? And this is clearly what we have been doing. First touch of the trend line, second touch of the trend line. The market broke the support level with a body candlestick, and then it's retesting. So if we had entered from this point, you can see this is a loss. And if we had gone all in this trade, you can see the market just took us out, and you can see clearly we just lost money on this trade. So this is the reason why we should focus on risk management. Risk management is the key to avoid something like this. Because if you're trading with a good strategy and a good risk management, you have nothing to be afraid of, not even losing trades. This is because risk management will help you minimize your risk and maximize your wins. So, this is how the continuation pattern works, and I'll advise you can backtest this strategy on your own. You can backtest them and see if it really works before you start using them, because I will not advise you to go ahead and start using the continuation pattern. The continuation pattern is good, go ahead and start using it. No, you should backtest this pattern, you should backtest it and see for yourself. Do you understand? So this is how the continuation pattern works. So the continuation pattern is not the only strategy out there. Like I told you from my very first videos, we have so many strategies. We have support and resistance, we have supply and demand, we have trend line, we have patterns, we have so many strategies out there. So all you have to do is pick one strategy that works for you and keep using it to make money in the forex market, like I've always told you. So this is the continuation pattern strategy. This is the exact strategy I use. And what I just explained to you right now is the strategy I've been using to make money in the forex market. This strategy is really working for me. You should try it out. And that's all for this video, and I'll see you in the next video. Peace out.